Hello, traders, and welcome to the Friday Wrap-Up, Friday, March 20th, 2015, the end of our trading week. Traders, remember this is brought to you through FXCL Excellence in Trading. Traders coming to you live from Pattaya, Thailand. Overcast skies, not too bad. A little cooler today. We're not cooking today. It's a beautiful day well, it's my Saturday morning, traders. If you're on the East Coast of the United States, it's nighttime. Actually, in California, it's probably nighttime now, too. Traders, if you would, please let me introduce myself to you. My name is William Gilda. I'm your moderator through the Friday Wrap-Up series that we do every Friday, about 4 to 5 hours after the Friday New York close. In this session, we're going to go over about 15 daily charts. I'm going to look at trends and see what we can expect in the week ahead. Traders, I started trading in the year of 2006 and 2008. I retired from a wonderful career in the Fire Rescue Department in the great state of Florida. Traders, I came to Thailand for a 3-month holiday. Well, it's 2015 and I am still here. Traders, I trade every single trading day. I'm listening to news, watching charts, watching technicals, watching fundamentals, and looking for probabilities and opportunities to enter trades and make profits. And as you know, traders, we cannot win every trade. All right, that's just a little bit about myself. Let's get over to the risk disclaimer, get the legal stuff out of the way. This is Forex trading has a large potential rewards, but also a large potential of risk. You must be aware of the risk and be willing to accept them in order to invest in the Forex market. Traders, most of all, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get over to the commentary for today. What a wild week, FOMC. I will tell you, if you traded FOMC, you did a very good week. You're probably not even thinking about Forex on your weekend break. There was a lot of pips moved with Auntie Yellen, the FOMC chairwoman, Janet Yellen. She's basically backstepped a little bit and basically is taking the idea that the United States is going to raise interest rates. They were thinking like May or June. And it looks like it's going to be longer than that. It looks like they keep moving the mark down. Now they want unemployment down like 5.2%. Now it's at 5.5%. So they keep moving the barriers. And, I think they're just going to do it. And I don't think they're going to give us a warning. Let me tell you what the markets did as they closed. The Dow 30 closed up 0.94%. The S&P 500 closed up 0.90%. The Nasdaq closed up 0.68%, with the Russell 2000 closing up at 0.91%. Going over to the Eurozone, the DAX closed up 1.18%, with the FTSE 100 closing up in the green at 0.86%, and the CAC 40 was up 1.00%, with the Euro Stoxx 50 positive at 1.51%. Let's head on over to Asia and take a look at what's going on. The Nikkei 225 closed up at 0.43% yesterday. S&P ASX 200 out of Australia closed up 0.41%, with the Shanghai in the green also at 0.98%, and the Hang Seng closed negative 0.38%, and the Kospi, being the last one of today, is closed in the red barely at 0.03%. So what do I expect the week ahead? I think the dollar is going to remain strong. I don't see the dollar obtaining strength. I see the dollar maintaining strength. I think the dollar is just going to basically head sideways. And when we see a euro yen chart, we'll get a good look at that. If you do not have a dollar index chart on your platform, just use the euro yen as your guide, and that will help you see where the dollar index is. Well, it's gone through the roof. So a lot's been going on. As you probably heard, Nike earnings report came out, and they are just booming and actually moved the markets at the opening bell yesterday of the New York Stock Exchange. Well, today for you all, being Friday. So a lot's going on, but I think we just need to trade what's in front of us, use the daily chart as a bias to your trading, and trade the trend. We want to stay within the trend. I'm not against counter trend trading. However, I only do it probably about 15 to 20% of my trades are counter trend trades. I try to stay within the trend. And I do trade 1 hour charts, so I do use the daily charts as my bias. So let's get over to some Forex daily charts review. And as usual, we will start with the euro dollar. And you can see the euro dollar is in a, if you take a look at this spatially, it's in a downtrend. It's having a couple of blue up days. We had a red candle. And Friday, today, you can see that we have a blue day. So it's an up day. However, it hasn't taken out any resistance areas out of significance. And I'm expecting in the next Asia session to start to see these pairs just continue their trend and follow the downside. And there's no good news coming out of the Eurozone, except for what I understood, what I read today, was that they've come up with some sort of an agreement with Greece on their debt restructuring, and we'll see what happens there. I think there's more to come out of that. I don't believe it, and we'll see how that goes. But that's what brought the Euros pairs up yesterday, was that they came to an agreement. Take a look at the dollar Swissy. The dollar Swissy has really moved its way up. It actually came all the way back up to 1.008. And, remember this big red candle on the chart was when they lift the 1.20 floor. Well, it's inching its way back up. This, to me, looks like this is just a fib on the daily chart. If you fib this whole swing, this probably isn't even at the 23.6 Fibonacci level. So I expect this to continue to the upside. And if you look left of the chart, it's not taken out those highs yet. So it might just head in the range for a while. We'll see what happens. All right, let's head over to the Great British Pound. This is the pound dollar, and it has really acted very well this week. A little messy in the beginning, but you can see now it's doing very well. It's in a downtrend. It's been sideways for the last few days, but look at those candles. Those are a lot of pips. The pound dollar has been giving up over 100 pips a day, so I am trading the pound dollar regularly. Like I said, I do go back to the daily chart. And what this daily chart is telling me, traders, is that I am able to sell this because I'm not at support. That's a big blue candle, and that's a lot of pips to the bottom of that candle at 1.4706. 4,700 being, a psychological area. So that's why we see that 1, 2, 3, 4, 5 days, it has bounced from that level. It spiked at one time, but bounced from that level. So we have plenty of room to trade this to the downside, and that's why we use the daily charts. Here's our dollar-yen chart that I was talking about, and you can see that it's come down a little bit, but it hasn't taken out any lows. It hasn't taken out support. It's at the support, but it has not taken it out. So it's just going sideways, and like I said, this is a great projection of what the dollar index is doing, and it is just holding on. It's just maintaining the dollar strength, but it's not gaining any. It's not obtaining any more strength. And the FOMC spoke on Thursday, and they want that to happen. Janet Yellen spoke about she wants to increase the dollar. She wants the dollar to get stronger. So we'll see how that goes. One of my favorite pairs to trade, traders, is the euro yen, and this is just a great pair to trade. You can see that it's bearish. Again, it had this week was pretty up and down, and that was because of the FOMC. And you'll see that in most charts where you'll see a candle that's an opposite color. But I guarantee if we didn't have FOMC, that would have been a blue candle there. And this is just going to fib this, and this is going to come back down. Again, we're not at support, so we can sell this comfortably next week. And that's what we look at these daily charts for the Friday wrap-up to see what we can do and what we cannot do. Saying that, let's take a look at the beast where we don't have that opportunity, and this is the pound yen. The pound yen is sitting on the 200 exponential moving average, and we're expecting this to bounce here. If you look left of the chart, you can see this is a very, very stubborn pair when it comes to the 200 exponential moving average. And we do have some room to come back down to it. However, we got that 179.000 level, which is a psychological level, and that is only 50 pips away. And the pound yen moves quite a bit. I haven't looked lately, but I'm pretty sure it's over 100 pips or 80 pips a day. So we only have 50 pips to the 200 exponential moving average. So if we do take a trade with the pound yen, we'd be pretty careful of that. knowing that really we only have 50 pips to the 200 exponential moving average on the daily chart. All right, let's take a look at the Aussie yen. Take a look at this Aussie yen. Well, the Aussie is weak and the yen is weak. And what would you expect? As what you see on the chart, everything is sideways. It is completely sideways. And the reason for that is because both pairs are weak. So we have weak against weak. And traders, as you know, we don't want to trade weak against weak or strong against strong. We always want a weak pair and a strong pair. So the Aussie yen is not a pair that I would be looking at to trade until we see some sort of a movement here. And I don't think that's going to come in the near future. Let's take a look at the Aussie dollar. Aussie dollar's made some pretty erratic moves this week, up and down and all around. Now, the Aussie dollar being a commodity pair is telling us that it reacts to data. And remember, these are daily candles, so there's a lot of pips in some of these candles. These are some pretty big candles the last 3 days, and there's a lot of pips. There's probably over 100 pips on each one of those candles. So you have to realize that. However, the good news here is we can still take the Aussie dollar down. We had an up day on today, being Friday, and we have plenty of pips to come down to support, so we have no problem shorting the Aussie come our next Asian session when we start our new trading week. And that's good news, so we can take this to the downside. Take a look at the Euro Swissy. I don't trade the Euro Swissy. However, it is sideways. And that's about all I can say. The only positive thing here is no matter what direction it goes, this just looks like a fib to me, and it's going to drop in some time. And the 200 exponential moving average is quite a ways away, so that's not even an issue here. So, I would look to sell this, but it's got to break these support levels, and it's got to show us it wants to move to the downside. And we don't see any signs of that at this time. So I would X the Euro Swissy off your list for this week. Here's another great pair, is the Euro Pound. I never traded this pair. This pair has really started to put out some pips. Look at this daily chart. Really nice. Nice bounce off of support. Came up, this is like the last 10 days of trading. Came up, did a really nice job, and looks like this is a fib. It's at resistance since Wednesday. Friday, we have a nice big wick on the closing candle. And come the next Asia session, starting of our new trading week, I wouldn't have any problem shorting this. The pound for sure is stronger than the euro, right? So we always want to trade what is the strong one, and we want to take this, and we want to take the pound in this situation. So I have no problem shorting the euro pound. One of my favorite pairs is the New Zealand dollar. This pair has been out of control last week. It was very hard to trade. It was all over the place as you look at this daily chart. There is no trending action here. This is sideways, and there is a lot of junk here. The only positive thing on this chart is that it's at resistance. It is spiked resistance, but it has not taken out the high. So there's a good chance in the next Asia session that this might continue to the upside and take out the high. I'm not sure on what data is coming out. I have not looked. My apologies for that. But this pair has been really horrible the last week. It's just all over the place. It has not been a trending pair, and until it gets its act together. But if you look at Friday's candle, this big blue candle, that's a lot of pips. That's close to that's like 180 pips right there. So it does move when it moves, but this is a bearish pair. If you look at this from a spatial intelligence issue, this is bearish. This pair is very, very bearish. All we want to do is sell the New Zealand dollar. And what we have here is this is reacting to everything that comes out in the news, just like the Aussie dollar. And this week has been really hard to trade the New Zealand dollar. I think this is probably the first week I've not traded the New Zealand dollar in a long, long time, really the last 2 weeks. This pair is just not stable yet. So I wouldn't put that on your list either. Here's a dollar CAD. Dollar CAD is just sideways, just hanging out. If the pound goes down, the CAD's going to go up. We know that. They're correlated. And, this is doing what it does. But it is in a sideways action here. You could actually say that this is a flag pattern. And we'll just see what happens next week. Hopefully it'll get some sort of direction and we'll be able to trade it again. It's at support. But it's in a range. It's in a range of support, and then of course it has not taken out any highs in the last. Well, that's got to be 21 candles there. So the last 3 weeks it has not taken out any highs. If you look all the way left of your chart, you'll see that blue candle with that spike. It has not taken that out. So therefore, it's a possibility that this can continue to the upside. Traders, this is the Pound Aussie. Very interesting pair. I traded it 2 weeks ago. I traded the Pound Aussie, and it was very interesting to trade. The only thing I don't like about the Pound Aussie is the spread. And I never complain about spreads. I expect spreads to be high at times. But this Pound Aussie, for some reason, the spread is really high. It's like 4 pips. And I'm getting like 0.2 on the euro, and this Pound Aussie is 4 pips. So I have not traded this. The spread is really out there. But this to me just looks like this could be a change of trend. If you take this, it looks like the letter C. If you take it from the left of the chart where it started its up move, and it is where it is now. We call this an old man easing into a hot bath. And this could be a change of trend. If it takes out the support next week, I would definitely say we're change of trend. And it wouldn't surprise me that it's heading for that 200 exponential moving average. And traders, to end our daily charts, let's take a look at the Euro Aussie, another pair that I really like to trade. It moves 133 pips normally a day. It's done its retrace. It's given us 3 blue higher lows. It's given us a doji on Thursday, a doji for today being Friday, and I will continue to sell this. We want to sell the Euro Aussie. Yes, the Aussie in this situation is stronger than the Euro, so we want to take this to the downside. Traders, I'd like to remind you that this is brought to you through FXCL Excellence in Trading. Please come visit us at fxclearing.com for your trading solutions. We have a great platform, and I think you'll find it very interesting to browse around and just take a look. And again, that's fxclearing.com. Traders, on behalf of myself, William Gilday, and our good friends, FXCL, I'd like to thank you for joining me this week for the Friday wrap-up, and we would do this every Friday after the New York close. Traders, have a great weekend break, and we'll talk to you Monday for the market opening preview before the London Open. Take care, traders, and we'll talk to you next time. Bye-bye.